Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on Canadian MJ. We have a whole bunch of names to look at, but first things first, I'm going to go over what my thoughts are on Canopy and Acreage and apply this intro to the US MJ video as well, a little bit of a repeat because it applies to both, and I'm going to do that video tomorrow. So first things first, CGC, we need to be distinguished very clearly here. They have not bought Acreage. They have made a deal that when we have full federal legalization in the United States, that there is a deal for CGC to buy Acreage. Another big note is that Canopy, Bruce, the CEO, said that they have been exploring a bunch of MSOs, multi-state operators. They've been looking at 6, and they're still in talks with about 3 others. So there's a couple things to take away from this. Number one, CGC is actively and aggressively going after U.S. multi-state operators, and they're trying to lock in deals ahead of the game early. Number two, individual MSOs now are looking, their price just accrued in terms of their value, in my opinion, because they are looking to their premiums are going to be paid if there are deals over what their current share prices are, and there is incentive for people to try and get in looking for the next name to get bought out. That being said, a lot of people want to see their individual US MJ names stay independent. The reason being, this is a huge market. The floodgates aren't even close to opening at this point, and there could potentially be more value staying independent than there would be just being bought up for whatever premium. And that makes sense to me. So let's say IAN right now, and IAN from its current price, if we had a deal come out and let's say they got paid 30%, 40% premium over what their shares are now, do you think that IAN as an individual company, if their share price is going to be more than 40% from where we stand right now if we get federal legalization? And my answer is yes, absolutely, because I believe there's going to be other hurdles to get over first, whether it's the Safe Banking Act, whether it's, federal medical legalization. I think that those steps are going to continue to see bullish action in the market. And I think that the gains would be more significant for the individual name as opposed to getting bought up by CGC, the shareholders getting shares of CGC as a result, and then now you're tied to what CGC is doing. So obviously, if those events occur in the U.S. market and in the U.S. government, essentially, then CGC is going to benefit from that, and the price is going to go up. But we have illiquidity, a lack of liquidity. We're not traded on major exchanges, and I think that the percentage gains of individual US MJ names has more reward potential if they are individuals, and if hedge funds and everybody is going to be piling into these individual names on any kind of major political news. I think that the risk to reward scenario is better staying individual. To move CGC 10%, you have to see massive news or massive volume to do so. And to move these MSOs, these individual companies 10%, not nearly as much. So that's an argument for the benefits of staying independent as a company and not getting bought up by CGC. So we're going to have to see how it's going to play out. Some names are going to get bought up. Some names are going to stay independent. Some names are going to partner with alcohol companies. Some names are going to partner with beverage companies. There's so many ways that this is going to play out. The bottom line is it's bullish. We know that. So why did Acreage and CGC go down today? Well, CGC went down because it went nuts after hours, and it went nuts during trading today. We went up to 47 and beyond. So from where we closed yesterday, that's a massive over a 10% move. And again, the size of the market cap here on CGC, for that kind of gap up, the number one bottom line is this deal, this potential deal could be 2 years down the line. So if you see a 10% gap up open on news that might not have any implications for 2 years, and again, the SAFE Act doesn't do anything for this deal. Nothing does anything for this deal unless it's full legalization. Free news just came out. Cannabis cultivation license in Germany. We'll see if that has a reaction after hours. So 10% gap up open on news that is nowhere near imminent on the horizon. People are going to take profit. Acreage, why in the world did we see a red close or a close at the high of or right where we closed yesterday? Number one, insiders loaded up yesterday. You go 14% on a day with no news. Yes, it was a bullish day for the sector as a whole. If you give it 5, 6, 7%, sure, it's in line with everybody else. But you go 14%, something's up. Very clearly, insider trading was going on. That means people are loading up with the intention of selling the gap up open the following day. A lot of people had that in their game plan to capitalize on the early information. So the deal is for 40% premium over the 30-day average of the price. And again, double check me on all my details. And if I am wrong on any of this stuff, by all means, let's discuss it in comments. But I want to look at the 30-day average volume of what ACRG's price is, because that tells me the 40% premium over that level is what the deal is for. So that 30-day average is $20.40. So where we started yesterday was already, we closed at $22.49. We are already 9% above the measurement, the 30-day moving average of what the premium is. So we're up 9% over that level, and let's just see where we were at the high of today. So high of today compared to, my tool's not working. The bottom line is we made a 40% move in 8 hours of trading on ACRG on a deal that is not having anything to do with anything in the near term. It's 6 months down the line. It's 18 months down the line. It's 3 years down the line. We have no idea. And people are going to take profit. The people that got in early, we had a total of a 40% move. From the low of yesterday at the open to the high of today, that's a 40% move. And that is pretty much a 35% move over what the 30-day average is. So we got real close at the high of the day to what the premium would be of this deal. And then we saw all that profit taking as people are going to lock in profit. Gap up opens in general are for selling. There's some instances where that's not the case, but the vast majority of the time, or I shouldn't say the vast majority, but more than half the time, if you're selling the gap up open, you're locking in profit with the ability to reload cheaper. So that's my spiel. Now let's get into regular technical analysis. Hey everyone, checking in on the USMJ video after the Canadian video yesterday. So just want to touch base on one thing I said where it was about the CGC and Acreage deal. And I said that it was federal legalization that would be the only thing to make the deal go through. And apparently Bruce came on and did mention that a change in the exchange regulations could potentially open up that deal as well. So it's almost putting the ball in the court of the exchange saying, hey, you could make this happen if you want to see these kind of deals go through and this kind of attention. But in my opinion, that would be putting the cart before the horse. I would be very surprised if a major exchange like the New York Stock Exchange or the NASDAQ would make a ruling that would allow for federally illegal substances, companies dealing with federally illegal substances to be listed on their exchange. I do believe that we would have to see federal law changes come before the exchange would make any kind of ruling in favor. So just something to be aware of, that there are other avenues of possibility, but they are unlikely in my opinion. So we will start it off with Acreage. We're going to go through all the long list of names, starting with large caps, heading down into some smaller caps, looking at all the MSOs, and Acreage saw a big time pullback. So I already talked about that in the intro a little bit as to why I believe that happened, but I do believe that an hourly higher low is going to form very shortly. So the hourly uptrend is intact. From 1972, we did not consolidate and form an hourly higher low. So again, that was a 40% move in 8 hours with no consolidation. Now the consolidation is very significant, but I think there is a solid opportunity approaching in the short term where we're going to look for the higher low to form, whether it's 2258 or not. Hard to say because that bounce happened right at the end of the day. So we're not convinced enough that that is our low. But if on Monday morning, if 2175 can hold, we'll call that our hourly higher low. I would want to see a break of 2258 to break the pattern of a lower high every hourly candlestick, which would show us the shift in momentum and a bounce off of a support level. So if we break 2258 while holding 2175, our hourly higher low will be set, and we'll then be looking for an hourly lower high to be set. But with how much room we have on this chart, that could potentially be a very easy 5 to 10% move to find the hourly lower high once that is set. So I will be interested in Acreage on Monday to see if there is a day trading opportunity. Probably not for me personally, but highlighting the opportunity for members, as I am not going to be able to easily trade Acreage, and the liquidity in the US is not too great. Checking in on GWPH. So this is these larger companies, specifically GWPH. You need to be paying attention to the overall market as well. And recently, the past week, the healthcare sector and the biotech sector both dumped. The healthcare sector dropped 7% in 6 days in reaction to political stuff with healthcare and Medicare and all that. So it's important to pay attention to, because without a doubt, in my opinion, GWPH was hurt by that because it is a part of the biotech sector, and there's strong correlation between biotechs and the healthcare sector. And I just talked about that in the S&P 500 video that I put out earlier this morning. But overall, it's still a healthy weekly chart at this point, and it is a lower high and lower low. So technically, we are in a bit of a downtrend on the weekly time frame. But if we zoom out to the monthly chart, it's a potential cup and handle on the monthly. So it is definitely something to be aware of, and we're going to have to see the daily chart change the trend. And we have a long lower wick, just like the sectors had on Thursday. And when we change this momentum and see an hourly trend change, we're going to be looking for just a daily lower high to form, because anything under 174 is a daily lower high. And to change the trend, we need the higher low and higher high. The more bounce we get to start this week, the more space we have for the higher low to form and the potential trend change. And a daily trend change, which has not happened yet since back here, hasn't happened in a month. We've broken the lower highs, but we never got the higher low and higher high confirmation of the trend change. But the trend change would be the first indication that our monthly higher low has been set. We would need a lot of follow through and a lot of proof. It wouldn't be high odds that our monthly higher low has been set, but it would be the first indication. So that is something to be paying attention to for GWPH. IIPR. So here's one where it looks like we have a weekly tightening pattern. And as soon as we lost the daily higher low pattern with the support of 8063 breaking, that told us to zoom out and look for the tightening weekly range. So that is what we have now. We have our high, low of the pullback. Our lower high is set at 86.35, and now it's up to the bulls to form a higher low compared to 75.56 to stay in this tightening range. If we see that bear break, we lose the weekly uptrend for the first time in a while, but there is a possibility. Look at this. We saw the same pattern with a lower high and lower low on the weekly, straight into a big bull move, keeping in mind that that was the December dump that led to that pattern. But that's the kind of pattern where you see a bear break on the weekly and no follow through. So you zoom out to the monthly time frame, and of course it's a very long-term monthly uptrend for IIPR. So that's the range to be watching, 75.56 to 86.35. So Curaleaf is establishing itself as the lead US MJ MSO multi-state operator, and the reason being most recently that they are at the top of the holdings list for 2 of the 3 recent and first ever US MJ ETFs that began trading. So we had 2 gap ups in a row. So obviously we're going to see short-term overextended action. We did hit a new all-time high on Thursday. How I traded this is I entered first thing on Wednesday morning. And my reason for doing that, again, why am I buying a gap up open? First off, I'd waited patiently for 4 whole minutes to see what the consolidation and profit taking on the gap up open would look like. And I saw no red flags. I anticipated that gap up open initial profit taking would get bought. And again, the reason was this was the first day that we had the information of what the ETF holdings were going to be, and that we're going to see, number one, they're highlighted for Curaleaf clearly being a leader in the space because of what these funds are doing. And number two, the fact that these funds could push up the price as well would lead to retail buying, in my opinion. So entered, swung overnight, lucked out with the bullish Acreage and CGC news that helped for another gap up open. And what I did first thing on the open for Curaleaf on Thursday is anticipating hype. Again, I bought the gap up open, but in this instance, my entire game plan was established around a scenario where I have a swing trade and I say, okay, we got a gap up open. I know I'm going to be well in the green on my swing trade, and it's going to potentially be a multiple week maker. So knowing that, I could either just sit on my hands and enjoy that, but I still see the opportunity knowing that there's hype. So I want to jump in first thing and just lock in a day maker because that's a high probability trade that I'm going to be comfortable with. So I bought first thing in the first couple minutes of trading, but my intention was always to sell 5 to 10 minutes later. I just want a quick flip. If I'm buying a second gap up open, I know that's a higher risk trade because we are going to see consolidation sooner rather than later. And I entered at, I believe I got filled on the US side of things Got to remind myself what the dollar value is here on the US side. Got filled at about 1060, and I sold in the upper 1070s, again, just less than 2 minutes later. And that was about a 1.75, or that was about a 75% of a day maker. So just locking in a quick day trade, knowing that I had that hype in and momentum in my favor. And then from there, I watched and said, okay, got that day trade in. And now I'm just watching to manage my swing position, knowing that I'm going to take some profit in my swing position because it's a second gap up open in a row and the bulls are overextended. So I saw the initial rejection from $11. And after that pullback, when I saw the second attempt, I put a sell order at $10.99. And I put it at $10.99 to go under the psychological resistance and to try and skip all the orders that were sitting at $11. So I did fill that sell at $10.99, pretty much the high of the day, which ended up being a double top at the all-time high. And then we consolidated for the rest of the morning. So that made it very easy for me to hold half of my remaining core position, my swing trade position, because I had taken half profit and had pretty much nailed the high of the day, fortunately. So from there, I ended up re-entering. I was out and about on Thursday, not sitting at the computer the entire day, but I re-entered in the, sold at $10.99 and re-entered, I believe, shortly after this higher low, I entered about the 1050s. So I re-entered half of my core position for about 4.5% lower, took that money off the table. I could have entered more shares for the same amount of money, but I elected to enter the same amount of shares and just 4.5% less. So what that does is it takes my core position for my swing trade and it lowers the break-even price 2.5%, because again, it was only for half of my total position, but that gives me 2.5% more space to work with of being profitable in that trade. So I'm currently still in a position on Cura, and I wanted to see if the hourly time frame could get a strong close and continuation, and we didn't get it. We got healthy consolidation. The bulls made their move up towards the end of the day, but it was met with profit taking. So it is a daily bearish reversal candlestick, and we may need to sit through a daily higher low. And again, I'm going to continue managing my swing position in short-term scenarios that I see as glaringly obvious. I'm going to try and take advantage of that. So not saying I'm going to just sit and hold this position forever. I'm going to actively manage it depending on what is going on in the short term. So the question we have on Monday, can the bulls hold 1360? That is the most important support level. And if it breaks, that tells us that daily consolidation is underway. And we're certainly going to anticipate a daily higher low to form once we are done consolidating. And we're going to anticipate it's going to be healthy. If the bulls can hold 1360 on Monday, that's a great sign for strength. And we're going to be looking up at resistance of 1430 and then the all-time high of 1474. So bulls are comfortable in the sense that we know we're either going to test the all-time high on Monday or we're going to see a healthy daily higher low form. The red flags would be if we saw a big red day with big red volume, but I would be very surprised to see that happen. I do not think it is a likely scenario, as we are still going to see some hype in the MSOs as the news percolates over the weekend for the next couple of days. And again, just garners interest, CNBC talking about things. So we'll see where we open for Curaleaf on Monday. CWeb very quickly showed us weakness on Thursday. The first thing I did in the first 2 minutes, 3 minutes of trading was say, okay, I want to look at all the US MSOs. I want to know who is reacting the strongest to this Acreage CGC news and who is reacting the weakest. And the first thing I said was CWeb and OH are standing out as the weakest US MSOs in the first 3 minutes of trading on Thursday. And then from there, I came back and checked in 3-4 hours later, and the only two red names in the USMJ space on my screen were CWeb and OH. So that early observation ended up playing out for the rest of the day, and it was just a way to compare to sector peers and get a little bit of insight. I do that every single day in the tech sector, in the financial sector, and just want to see who are the stronger tech names, who are the weaker tech names, and that tells me if we're having a bullish market day, look at the stronger names. If we're having a weaker market day, look at the weaker names. So on CWeb, we saw a gap up and significant profit taking and much more clear profit taking pretty much all day. So it is still an hourly uptrend because our last support was 2560. So anything above 2560 keeps the hourly uptrend intact, But the size of the pullback at this point, when we do find our hourly high or low, we are just going to anticipate an hourly lower high is likely to form, as the top of this move is currently about 6% away. So once we find a support level, we're going to be looking, can the bulls hold 27, make that 26.37 on Monday? First thing, that would be best case scenario. If they can hold that level and break 27.50, then our hourly support will be established and we'll look for that lower high. If we can't hold 26.73, that tells us our hourly support level has not been established yet at this point. And if we lose that level, again, have to form a daily higher low. Remember that nobody on the US side here is confirming their daily trend changes. They are breaking resistances on the last 3-day move, but we have to see the daily higher low and higher high to have confidence in continuation. An impulse bull move is nice, causing shorts to have to cover, seeing some new blood come in for the bulls, but we need to see a higher low and higher high to tell us that it is sustained bullish action and there is continued buying pressure. TRUL, this one was a bit more easier to anticipate a lower high compared to 21.18. To think, again, what's the most likely scenario? Are we going to be able to see a 30% move in 3 days to go from the low back through resistance? And the odds are not favorable. So we formed a lower high compared to 21.18, and we topped out at 20.64, and now we need a higher low. So ever since this pullback, we've anticipated that an equilibrium was a more likely scenario, because when you see this kind of volatility, you look for tightening ranges. So if we break support of 19.05 on Monday, we're going to be looking for a daily higher low to form in the upper teens and a tightening range that will probably play out until probably the end of the week. And we'll be looking for a break of the tightening daily range to indicate short-term direction on TRUL. If we break bullish, then our weekly higher low is clearly established and we're heading back towards recent highs and all-time highs. And if we break bearish, that tells us a weekly bull flag is not likely. It does look likely at this point, but again, we have to see how the tightening daily range that we're anticipating is going to break. And that would tell us the weekly higher low has not been established yet if we were to break that daily pattern bearish. We get a lot of information by what consolidation looks like. And pretty much for all US MSOs, that's what we're looking at Monday and Tuesday. What is the consolidation going to look like from this move? Is it going to be high bear volume telling us a lot of people are exiting? Is it going to be low bear volume that is going to tell us that it's healthy, which is what we've seen over the last couple weeks as we were looking for these MSOs to establish weekly higher lows and maintain their uptrends? The daily volume on most names was clearly low. So bulls want to see low bear volume on consolidation. Lost my flow. IAN. So IAN had a big time gap up. My plan, as I talked about in the video Wednesday night, was to take profit. I didn't change that plan. That news that we got on Acreage and CGC, if I were a bit less experienced, if I didn't know gap up opens and news events, I might say, I had a game plan of selling further shares and scaling out on this bounce, but this news is going to, that would be a greedy reaction. If I were to say, well, now we have this news, I'm going to hold longer because I want bigger gains. That would change my game plan, which definitely you want to factor the new news into your game plan. But in this instance, all it did was make me want to scale out more because I knew the bulls would be more overextended in the short term and probably tire out sooner. So this oversold bounce has gone really well. Again, we're not changing any daily trends at this point. Scaling it into weakness for oversold conditions, lucked out a little bit in terms of the news making the bull move more significant, but this gives the bulls a lot of space to work with to form their daily higher low compared to 591, and we need the higher low and higher high in order to see the daily trend change. So I exited more of my position on IAN. So I entered, scaled in the 12th and the 15th. I exited the 17th, 25% of my position. I exited maybe another 35% of my position on Thursday morning. And I haven't reloaded anything. If we pull back on the daily into the mid to lower $6 range, depending on what the volume looks like, I may re-enter the position that I did sell for lower, just like I did on Curaleaf. So looking at the hourly time frame, it's a nice tight equilibrium. Let's see if it's more clear on the 15-minute. So we got the high, low of the pullback, lower high at 703, pretty much a double top and a double bottom on the 15-minute. If we break 681, the daily consolidation to form a higher low is underway. And if we break 703, then we're heading right back up to the recent high of 722. So IAN, again, my game plan has always been lock in profit, scaling out on the bounce to lower my cost basis and my break-even point, and then look for the daily trend change to be the second indication that our monthly higher low has formed. If the daily trend can change, the odds that our monthly higher low has formed in this equilibrium will increase a decent bit. And when the weekly trend changes, it will increase it a lot a bit. HARV, big gap up open and profit taking. That's a lot of bear volume on that profit taking. So we have to see what it looks like heading into Monday. And again, a lot of volume, but we did see that initial bull push as well. So some of that is bull volume. So I want to zoom in and say, okay, how much of that was bull volume? And it's just pretty much the first half hour significant profit taking. So we did have a 15-minute equilibrium here that broke bearish at the end of the day. 1226 was our low, and we did hit a new low of the day at the end of the day. So we're not confident that our higher low on the hourly has been set yet. If we break 1208 on Monday, we zoom out to the daily, look at previous resistance acting as support. But we zoom out to the daily, if we break support on Monday and say, all right, we have to form a higher low compared to 1049 and then turn around and break 1325 to change this daily trend and have us looking back at the all-time high after our new weekly higher low has been established. So we have to change the daily trends to be confident that our weekly higher lows are established at this point. OH broke a bunch of resistance. It hit a new all-time high, but it's almost a double top at that all-time high. Bulls want to be a bit cautious of that. So we have 1077 as support. If we see a bear break on Monday of 1175, then we have to come down and form a higher low compared to 1077 and then turn around and break $13 to confirm the daily trend change and see a new all-time high. Best case scenario for the bulls on the US MSOs on Monday would be to form daily inside bars. And that means the bulls were able to hold their lows of Thursday and establish a bit more support. CL is the same thing, new all-time high, but a bit of a double top, have to be cautious. And again, if I'm looking at these two names, and if I were to say, all right, where I'm looking for an entry in one of these two names, who am I going to choose? I'm looking at OH and I'm saying the amount of space that we have to form a daily higher low is 10%. 10% of a pullback until we get to the must-hold support level. For CL, to get down to that level, 12%. So that tells me I have more space to work with. The bulls saw more of a bounce off their low, and it's just a slight difference. If I'm looking at two names and I'm keeping all else equal, that's enough to make me sway in one name as opposed to another. So we did close down at the low. We don't have a sign that our hourly support level has been established. If we break 1612 first thing Monday, we zoom out to the daily, and we have to see a daily higher low form and then a bull break. Ideal scenario, again, would be a daily inside bar to give the potential, not exactly of a cup and handle pattern, because the psychology of the cup and handle pattern is the inability to break the left side of resistance on the cup. The right side needs to be lower, but it would be close to the psychology of that pattern if we could just see very healthy inside bar, short-term consolidation before another attempt to get a more convincing all-time high. MedMen saw a bull move as well. We did break the daily lower high pattern, but as we know, this move is coming off of the low, and we have to change the daily trend, which has been bearish for a few weeks at this point. So the bulls do have a good amount of space to work with. If we break support of 396 on Monday, we need the higher low compared to 364 and then a break of 422 to change the daily trend. The weekly chart is still looking for a higher low. We broke resistance on the weekly. We did not confirm any trend change, but if we hold this support and then can come around and break 469, which again is a ways away, but if that were to happen, that would confirm the weekly trend change for the first time since the all-time high on MedMen. KSHB not really seeing much of the love of the MSOs, and that's because it's not an MSO. It is in the US, but it's not of the multi-state operators subsector. So focusing on subsectors, as the extraction sector showed us early this previous week, is important. So we did hold support of 526. We're anticipating an equilibrium. So low of 526, high of 597, higher low of 532, and the bulls need to follow through and look for a lower high in the upper $5 range. Weekly time frame, we did have the bear break of this weekly pattern, and the bulls defended it last week, but we're not seeing much follow through of that defense. We do have to be cautious on KSHB because of that weekly bear break that did occur. CVSI, so we were watching that hourly equilibrium on CVSI, and it did break bear without a lot of follow through. That gets my attention. A clear pattern that takes days to tighten up with a bear break breaking multiple levels and getting no follow through tells me to look potentially bullish. And if the bulls can break 563 on Monday, that'll be the start of the momentum shift. First resistance is 558 and then 563. So the daily time frame is also showing us a very tight range, and we would be looking at, again, we're looking for the weekly higher low to form, which we are not confident of at this point. But if we can change that momentum and break 563, we're then going to be looking up at $6 as a daily double top as the most important resistance level from there. So again, no volume spike. When we see a break of an equilibrium and tightening range, we have to see volume behind it as the prove it indicator that that break is occurring. And we certainly did not get that on Thursday, as it was the lowest volume day that we have seen in the past month plus of trading. Look for the volume spike on Monday. NBEV, potential bear flag, very weak bounce, no bull volume behind it. Hourly trend change without a ton of follow through, breaking 539. The bulls did not get much follow through over that. No candlestick closed above it on the hourly. And we've got resistance at 531 and 545. Support is 516 and 502. Bulls do need to be cautious here. In order to negate this bear flag, we're going to have to see the bulls make their way up towards 560. So anything under 669 is a daily lower high. So we certainly know a daily lower high is looking to be set on this bounce attempt. But if we don't get follow through, and if the bulls cannot break 545 on Monday, the odds of a potential daily bear flag will increase a bit. SNN, a lot of people talking about SNN. Let's look at the weekly. Weekly chart's choppy. There's not a lot of clarity there. So I look at the monthly. Is it more clear? Bulls are trying to change the monthly trend. And so far we have our low, high of the bounce. This is a higher low at 423. And the bulls have to break 566 to change the monthly trend, which has been bearish since inception. So the weekly chart here, inside bar. So we know it's a tightening range, and I would just be looking at 423, 550, higher low is 470. Looks like a lower high is set here at 507. Bulls need to hold 470 and break 507 to shift this daily trend in favor of the bulls. And I pretty much wouldn't have interest in SNN unless we can see that happen. But if we see that happen, the potential of a monthly trend change is in play. PLTH, just a big time bull and still very overextended. We did consolidate on Thursday. Anything above 305 is a daily higher low. Looking at the weekly chart keeps us cautious. You know, if we we're going to look for entries up here, we definitely want to keep tight stops because, well, personally, I wouldn't be looking for an entry up here. I'd need to see a bit more daily consolidation to be comfortable. Let's see, have we lost the hourly uptrend? Pretty much a double top at 358 and 360. We did take out some support levels, but no bear follow through. So bulls still holding on at this point, and we're going to have to see a break of 330 to indicate that we're going to look to pull back to the low $3 range to try and form a daily higher low. 358 and 360 are our resistances, and bulls still holding on well overall. SLNG, equilibrium on watch. So the daily chart, we have the high, low. Looks like we're setting the lower high, but Monday we have to see the bears break 257 to be confident that our lower high is set. If it's a daily inside bar on Monday, that won't be the case. Have to lose the pattern of a higher low every day for us to be confident that our daily lower high is set. And when it is, we will be looking for a higher low compared to 219 and watching for this equilibrium. And because that 290 level is the all-time high, we want to certainly see how is this equilibrium that we're anticipating going to break. Because if it breaks bullish, we're looking back for new all-time highs. PYX is still crushed. It's a potential bear flag on the daily. And the reason is we shifted momentum, breaking some resistances on the hourly and saw no follow through. So for this daily chart to negate the bear flag for me, I'd need to see a move over $20, which is, again, a long way away. We're still oversold on the daily. We're still looking for a monthly higher low to form compared to 1130, but there's a ton of space. We could pull back 30% and still, maybe 25%, and still hold that monthly higher low. So we do need to be cautious. There is very little sign of a bounce. There is going to be a good entry opportunity, in my opinion, approaching, but to eliminate a lot of risk from that entry, I would give up a little bit of reward to see a clear momentum shift. 4-hour time frame changing the trend would be a bit more convincing. but we have to see a break of 1845 to get that trend change on Monday. And again, look at the 4-hour exponential resistance levels. The last bull push up, we held it as support. When we lost it, it has now acted as resistance more times than you can count. Well, I won't go that far because you could count if you wanted to, but we'll call it a dozen times. So if we can change this 4-hour trend and get over these exponential resistances and see enough follow through to get them crossing bullish early this coming week, that would be the shift in momentum that bulls are hoping for. ZYNE, also a daily equilibrium, high, low, lower high, higher low held on Thursday of 749. This is a scenario where bulls can make a play off of support. 15-minute RSI at that point, I'm sure was oversold. Down at the low of 760, the RSI was, but look historically, RSI is holding 30 multiple times on the 15-minute time frame. So if I see a key support approaching and I see the RSI has held on the 15-minute time frame the last 4 times and we're approaching a key support level, I can make a bottom fishing play. Let's say I enter at 765 and my stop is going to be 749 and I'm looking for the daily higher low to form and hoping that we can get a bull break of this pattern. We are going to anticipate that if we do get follow through over 820 on Monday, we're still going to look for a daily lower high compared to 905 in the short term for this to continue tightening up as the volume drops off, which is the norm for these tightening equilibrium patterns. But we're going to be looking sometime later next week if we do get a bit of follow through for this equilibrium break. And this is one to be watching because if it breaks bull, it's a potential little weekly bull flag. And if it breaks bear, that tells us we still need to find our weekly higher low. LDS, big gap up open. Anything above 48 cents is a daily higher low. Still have the hourly uptrend intact. So I'm looking at high, low, a lower high of 66. And anything above 59 keeps the hourly uptrend intact. Lose 59, we zoom out to the daily, and we need another higher low to form compared to 48. And this is one that is shifting longer term trends. Weekly time frame took its sweet time, but nice follow through the last 3 weeks. Still very strong on the daily. It all depends on whether the low of Thursday breaks. BAM is finally consolidating. Volume climax, bearish reversal candlestick, signaling the top, temporary top. So daily inside bar, if we see a bear break of 232 and 221 on Monday, then we have to pull back. Our last daily higher low is 148, so we're anticipating a daily higher low is very likely to form as a result of this consolidation as RSI levels cool off significantly. Hourly time frame, if we see a bear break of those 2 levels I just said on Monday, the hourly RSI is going to be approaching oversold. And the hourly RSI being oversold for the first time after a blue sky breakout is generally a good buying opportunity. And it would also line up with the daily 12-period exponential support, which is going to be around 210 on Monday. So if we get a bear break, bulls will be looking to buy the dip in the low $2 range, trying to form that daily higher low. Keeping in mind that we know the weekly chart is very overextended, so we do need to be cautious of that fact as well. So I appreciate you watching. There's a whole lot to cover as always. It's a day off here, Friday, Good Friday. Hope you have a happy holiday weekend. We got a chat room full of people sharing due diligence and putting in hours of work on our days off because we love this stuff. So do good things out there. We'll continue to check in as always, and we'll see you on Monday. So picking back up on adventure time, heading up the East Coast from Florida. It is was August 5 years ago. And destination was the Northeast. I believe I was going to a friend's wedding. I grew up in Massachusetts, and the foliage was about to be popping off in New England. So heading back up for there and making my way along the coast as we go with some beautiful flowers. Thought this was a cool shot of the diversity. This was all in my campsite. All the different kinds of algae and moss and lichen and cool different colors, cool different shapes, orange, blues, purples, teals, greens, all breaking down wood. And one of my favorite facts is that trees were around before fungi, and I might be getting it wrong. It's either the bacteria that break down trees or the fungi that break down trees didn't exist when trees were thriving. And so trees would fall and die, and then they would just lay there, and nothing was breaking them down and turning them into soil. So certainly a different kind of world back then. This giant wasp took out a giant cicada right in front of my face as I was walking down the trail. I believe this is in Kentucky at this point. I like bugs. These are furnaces from the 1700s for metalworking. Just these big stone structures that allow the heat to get trapped, to get hot enough to be able to work with metals. So that was pretty cool. This is in, oh man, what is the name of this? Fort Fredericks. I should have checked beforehand, but Fort Frederickson, something along those lines. I think it's Virginia. I like the stuff from the 1800s. I grew up with my grandparents living in Gettysburg, Pennsylvania, the site of the famous Civil War battle, and I've been going there. I've been there 30, 40 times in my life or more. And so we got all that history, all the battlefield tours, the ghost walks, and all of that stuff. So it definitely still interests me. But a cool big old fort with big walls still around 250 years later or so. So this was just, I think it's a state park, and I was just hanging around there, and I did go back up through Pennsylvania, and this is the front page of the Gettysburg Times, I believe it's what it's called. Local farmer finds mutant ear of corn. The happy guy, there's his 15 minutes of fame, Ben Clunk. 3-headed ear of corn, front page of the newspaper. It's a simpler place. Then I hopped on the AT trail just for a couple nights. There's your shelter. And heading up now as the leaves were continually changing to the White Mountains of New Hampshire, my old stomping grounds. That's where my dad used to originally take us camping, and that's where I started to fall in love with nature. If you have children, take your children camping in a tent. RVs are cool, but take your children camping in a tent. It will probably change their life. And I'm 30 years old, and I can think back 25 to 20 years ago and how much of an impact that had on me and how it sparked my love for camping and how I then used that passion to road trip around the country and experience all these things because I was comfortable doing so, because I had an adult show me the way and show me how to do these things. And if I had never camped, it's probably, if you never camp and you're all of a sudden 30 years old, it's probably hard to get comfortable and to get into doing it consistently. Take your kids camping, even if it's in the backyard. It's an adventure. It's fun. You can bond and roast s'mores and have a fire. Teach your kid how to make a fire. All good stuff. That's the advice for today. We'll see you next time.